All right, welcome, welcome.
Good morning.
Good morning.
This is the True Believers, 9
Yeah,
a.m.
the 9 a.m.
Incredible.
Everyone was in bed early last night here in this room, being responsible. I love it. Guys, we have a lot of ground to cover. This is going to be a ton of fun. For folks who haven't, I'm sure people have heard you both speak before and are familiar. Danny, I feel like we do this every year. This is a ton of fun. This is what I always look forward to. Can you just give a quick 30 seconds on yourself, coin shares, and then we can get into it?
Sure. So Danny Masters, I had a long career in the commodities business, working for Solomon Brothers and JP Morgan. I then segued into running my own commodities hedge funds for about a dozen years. And in 2012, I saw the light of what was then just Bitcoin. We pivoted our entire business into the Bitcoin space. And while we were not computer scientists, which was most of the community at that stage, we thought we'd try and make it easier for people with a normal bank or brokerage account to get the price exposure to crypto. And we started to launch a lot of crypto-linked products. And that has mushroomed into 11 billion in assets now, 25 odd listings for securities around the world that track baskets of cryptos, staked cryptos, individual cryptos, equities, and various other strategies as well.
Meltem.
So I also, like Danny, started my career in commodities in the oil and gas business. Took a long and meandering road, but ended up at DCG in 2015 and helped build out digital currency group. I met Danny in 2018. I had just left DCG, but nobody knew. And Danny actually hunted me down at an event and said, hey, we need to chat. We're building this business. And at the time, it wasn't called CoinShares yet. It was called XBT Provider. Didn't have a lot of AUM, but he said, I want to work with you and grow this business. So it was a fortuitous meeting. We spent 5.5, almost 6 years working together on CoinShares and building and growing that business, expanding to the US, growing our offering, investing in early stage companies, which has been sort of my focus over the last decade. And then I left about 3 years ago and thought about what I wanted to spend my time on, maybe 2 years ago actually. Unclear, yeah. I thought about what I wanted to spend my time on, and now I'm bringing together my background in oil and gas, energy commodities with crypto, and I'm focusing on investing at the convergence of energy, compute, and crypto. So it's been a really fun relationship. Danny's now an LP in my fund as well, and we talk a lot about trading, psychology, new commodity asset classes, and it's been a wild ride. Continues to get wilder.
It certainly does. And I would love to end this talk maybe on the future. And we've talked about that already quite a bit today, where the two of you see this market going. But maybe we can switch things up and actually start with a little bit of a retrospective on the last 10 years or so. And there's no two people better to do that with than who I've got on the stage with me. And
is he calling us old, Danny?
I would never. Experienced is the word that I would choose. But can you take us back, we're talking about this merging of equity markets and crypto, how far we've come, how institutional the asset class feels today, but it wasn't always like that. And maybe, Danny, you could take us back to your days of trading, I think the words were in the box motel.
Yeah. Well, it really was, I think Bitcoin was around $200, $300 or something like that when we started to get involved. And it was just something, having spent a lot of time in commodities and some volatile commodities, particularly natural gas, crude oil, and so on, it seemed like a very naive market to me, and it seemed to have a lot of opportunity at that stage. And the episode Mike is alluding to was a time when we didn't have much of a budget, and I was staying in one of these Japanese-style coffin hotel rooms at Gatwick Airport in London for a 5 o'clock the next morning flight. And so I had my little cubicle, and I was trading on OKX, and there was a big liquidation at the time. Maybe what was big at the time, $200 or $300 million, let's say. And OKX had a funny deck that when the liquidation happened, the market would sweep down, but it would stop and leave a limit order, essentially. So a couple of $100 million get liquidated, and there's like 200 million of Bitcoin just sitting there in a single offer of someone being liquidated. And the market obviously backed away from that. And I sat in that room for most of the night. And late, early in the morning, a few people started to nibble away at the last couple of $100 million, and then someone buys, 10 or 20 Bitcoins, and then 50. And I bought the last 20 million of that order. And the minute the order was expired or filled, the market just rocketed back up again. And it just struck me as one of those things that a really new, young, inefficient, marketplace. And there were many examples like that where, as an old school commodities trader, you were like, they were just really handing you money. Those times are long gone, but that was the way it was back then.
And when did the two of you start working together? What is the origin
Oh,
story?
I've got to tell this story. I've got to tell this story.
We have photos of the first encounter, and our colleague Jean-Marie is over there. He was involved as well.
So we were at the CFC conference in San Moritz, and both Meltem and I were speaking, and she was up first, and I was second. And we were in the green room just awaiting our call, and she said to me, why don't you come up into the auditorium and listen to my speech? And I'm like, of course I will. So I walked out and I sat in the front row, and all of a sudden there was this rumbling sound and rock music and dry ice clouds and flashing lights and like logos of DCG, and Meltem came through the smoke in a feather boa and a black leather skirt and high-heeled boots. And it's like, hi, San Moritz, like this, I'm Meltem. And then it was like, Lady Gaga coming out onto stage, and she gave an amazing presentation. And I'm sitting there going, I got nothing. I didn't even have notes. I didn't have a presentation. I had no lights, and it was just terrifying, So it's a very hard act to follow. And I just approached her afterwards, and I said, how are you getting along with Barry Silbert? And I won't tell you what she said at that time. My next words were, would you care to work for us? And that's the beginning of a beautiful collaboration that we've had.
Yeah.
Is that how you remember it too, Meltem?
Yeah, and I remember when Danny and our business partner at the time, Ryan Radloff, who's a fantastic human, they were like, let's sit down and have a drink. And I hadn't eaten all day, so I was like, I'm gonna order something. And I happened to order a burger, and it was a Swiss interpretation of a burger. So they're trying to have a very serious conversation. I'm like eating this enormous burger. I think the phrase I used was less eloquent than eating. I was just like inhaling it. So yeah, that was my memory. And then we had a CoinShares board meeting with the 4 partners and myself, and we went from there.
Yeah. It was an instant hire.
Beginning of a beautiful relationship.
Yeah.
Yeah, it's been a really productive relationship. But I will say it wasn't without its challenges. I mean, look, the first 3 years I was at DCG, I spent a lot of time, raising money for that business from financial institutions, and we were able to do that, but it was a slog. And I recall, going into that role, and everyone in my life was like, what are you doing? Bitcoin is money for criminals.
Yep.
Right? It's for like drug trafficking and laundering money on the internet. Like, why are you throwing away your career working on Bitcoin? You could do anything. Like, why Bitcoin? And I was like, you guys just don't get it. And I knew that the directional heading was correct. I just didn't know yet what the execution would look like. But I knew that if I was in a place where we were touching a lot of different parts of the Bitcoin ecosystem, investing in all of the companies, building the market structure, that eventually I was going to figure out what the right bets were to make. And I would say CoinShares was the same thing. Like, in 2018, investing in Bitcoin was still very contrarian, right? The majority of people who were buying our certificates were retail investors, right? There were really no institutions. Market microstructure was still really broken. There's a lot of work that needed to be done. And so I think in hindsight, people look back and they're like, oh, it was so obvious, like, oh, it took a lot of courage. It took a lot of fucking conviction to stick with it. We went through a lot of really difficult times. We had a lot of regulatory issues. We, were targeted by regulators in certain jurisdictions in very sort of nasty, vindictive ways. It was a slog. It was a battle, and I think now you look at crypto, right? It's an obvious thing. Like, it has gone from being contrarian to being extremely consensus. We put out a research paper maybe three and a half years ago where we published, the optimal allocation to Bitcoin is 4% of your portfolio with quarterly rebalancing. And at the time, that was like a crazy thing to say. And now you have the world's largest financial institutions and asset managers calling for 5% portfolio allocation. So I just think it's insane still to me how far we've come, but it wasn't so long ago that it was a really, really challenging business to be in. And we almost died so many times.
I think that's lost on people who maybe are a little bit newer to the industry, even over the last couple of years. If you've been operating a business in crypto for 5, 10 years, you have looked your maker in the eyes probably multiple times and come very, very close. I don't think there's a single business in this space that hasn't. And in so many ways, we've come really far since then. But maybe to get a little bit spicy, like, what are some of the ways that we haven't? And Meltem, you showed this great slide in our New York conference this year, which was the total market cap of crypto, sans stablecoins, Bitcoin, and ETH, and it's basically been flat since almost 2020. And so I'm very curious, like, give us an update on that slide. Have things improved? Have they not improved? Why have they not improved? How do we get the rest of these altcoins? I thought it was alt season. I've been waiting for alt season.
Let's just be very clear, right? Bitcoin dominance is still really high, right? The asset class crypto is by and large Bitcoin. It's still a Bitcoin story. If you look at what institutional allocators are at, it's a Bitcoin story. And that's not to say there isn't value in Ethereum, Solana, and all of these other assets we have. But at the end of the day, the story is still a Bitcoin story today. And if we look at that chart, right, the reason I wanted to show it is I think there's a lot of conversation around like alts and these other parts. It's a Bitcoin story. It has been a Bitcoin story. It's going to continue to be a Bitcoin story for some time to come. And what we saw basically is, 5 years ago, altcoins, everything except for Bitcoin, Ethereum, stable coins, was at a certain point. We saw a big dip, obviously, post-FTX, when a lot of those assets saw really challenging times. Now we're at about the same levels we were at in 21 as sort of the peak of the last bull market. That hasn't changed, right? Stable coins, yesterday we actually passed a new all-time high of stable coins in circulation, 300 billion. I think stable coins are going to continue to grow exponentially. The tokenization of assets, right? If you can trade a stock 24/7 on chain against stablecoin trade pair versus, waiting for market close. We saw what happened after market close last Friday in the US. That's going to be, I think, a way a lot of firms will want to trade. But at the end of the day, I think it's still primarily Bitcoin. The market microstructure that was created, a decade ago when you first started trading Bitcoin hasn't really changed that much. Yes, there's more institutional participation, but I just think that there's still a lot of work to be done. And again, crypto is very cyclical. We're in a great market now, but I think that could very quickly change. And all it takes is a few adverse events, right? So I think that by no means are we out of the woods yet. We have a lot of work to do. We have a lot to prove, and it's going to require courage and conviction.
I think the thing that's really changed is, in the early days, there were very few choices of which crypto you might engage with. And at the time, there were some remarkable businesses that were grown from, let's say, inside the walls of crypto. So if you look at BitMEX, Arthur Hayes' company, it was phenomenally successful in the day, but you would have said at that time its customers were exclusively crypto people. And you could really gather, you could really make a business that way. And now, all of a sudden, you have 20,000 crypto assets of various kinds, and that, while the crypto industry itself is very powerful, it's diluted by all of these different types of chains and so on. And they come along, IOTA comes along, internet computer comes along, and you kind of wonder why. And it can't power itself from within the community. So, and the type of people that found these networks are not the type of people that really look to the outside world so much. But I think it's really important for L1s especially to have a real world use case these days. It's time to actually be useful. And those that are not, a couple I just mentioned, are really struggling.
This is a personal theory of mine, and I'd love to try it out on the two of you and see what you think. But I think one thing that has changed, at least in some sectors of crypto that didn't used to be true, is the barrier to entry has gotten higher in more mature sectors. So, like you said, there have been a number of L1s that have just gotten sprung to life over the last couple of years, and it took, sometimes a couple $100 million in VC, but those haven't really panned out. There's much less appetite to roll into new L1s. And actually, the cost of running an L1 these days is much, much higher than it used to be. There are plenty of new ones that are still getting built, but if you are doing it outside of the EVM or the SVM, and just the amount that you need to pay to service providers is very, very high. Same thing with exchanges. I think even a couple of years ago, the strategy of being an unlicensed, non-US operating DEX or prediction market, that used to be valid, but even now with the US opening up, prediction markets like Kalshi and Polymark getting funded, Binance now has however many, a couple 100 million users they have. It just doesn't seem as easy to compete in these spaces. And maybe that's what made it so difficult to compound capital, because the barrier to entry was so low. You got a new competitor, 100 new competitors every year. That doesn't seem to be the case in some of these sectors anymore. What do the two of you think about that?
Well, it depends what you're doing with your blockchain, right? I mean, as soon as you start touching the financial markets now, you're dealing with a pretty heavy regulatory burden. the Trump administration sort of let a lot of offenders skate. You know, the DOJ had a dozen outstanding lawsuits. I mean, some of them I think were pretty justified. I think Tornado Cash probably was a problem. A lot of other ones, Coinbase was not. So yeah, there's that. And people, you know, resources are expensive for good ones. So yeah, and it's just, you know, it's a much more competitive space, and the margins are thinner for people coming in.
I think it really depends on where you are. I'm a very early stage, like pre-product, often initial idea. It's going to evolve from there sort of investor. I think there's still a lot of new spaces being explored where you don't need a lot of capital. I think what is interesting about crypto is there is really an abundance of capital available. You don't just have venture firms, but because individuals in crypto have accumulated a lot of personal wealth, right, over the last decade, because the whole asset class has sort of grown and evolved. You have a lot of angel investors who are operators in the industry. You have these launch pads like Legion and Echo, where you can raise large pool of capital from the most sort of prolific, dedicated crypto users who trade a large amount of volume on chain. So I actually think there's still a lot of capital available. What I think is missing right now is net new ideas. We see a lot of people sort of taking things that have already worked, like perp dexes, like prediction markets, stable coins. Neobanking seems to be having a renaissance. On-chain asset management seems to be having sort of its own little renaissance. So I think we see a lot of people, you know, starting new businesses, but they're just not adding anything net new to the space, which is part of the challenge. The question is, what are net new opportunities that are bringing something new and additive to the crypto space that hasn't yet been done?
What about old ideas that you, so you mentioned Legion and Echo, and one thing that we're seeing a little bit of a rebirth and a renaissance in is ICOs. So ICOs was, I remember actually the first time we did DAS in 2019, you couldn't really say the word token on stage. It was such a dirty word because we were dealing with the hangover of ICOs that had just happened, and the perception was they're scammy and tokens are bad. But now we're starting to see ICOs come back with...
We're calling it internet capital markets.
Sorry, it's internet capital markets now. I know.
Better.
I'm using the incorrect... but there seems like there's a lot more energy here this time, and there were some iterations. And I'm curious, you know, both of you are prolific investors. You know, how do you think about capital formation happening in this way that we kind of explored in 2017 and now we're tweaking?
I mean, I'm going to defer to Meltem, and that is more her space, generally speaking. But I do remember the initial ICO boom, and I thought it was very, very interesting at the time, and it seemed like a wonderful idea. And I actually wrote a paper back then called Escape Velocity, and my thesis was that one of two things was going to happen in ICOs. Either ICOs were going to eat capital formation, and that was going to be the way we do it before, or all these people were going to jail. And it turned out to be the latter. So I'm interested to hear how it is now.
I mean, you were halfway right on both counts.
Yeah.
Look, my view is very simple. I think crypto is and remains the most prolific way to raise capital for novel new ideas. And I think the creation of wealth in the crypto sector has fueled capital formation in other sectors that were very unpopular. I often talk about Bitcoin mining fueling a hardware and data center renaissance. I think without Bitcoin mining, we would not have had the AI boom. A lot of people don't recall NVIDIA. The first time NVIDIA saw major uplift was in 2017 because of Ethereum. Right? Ethereum miners were buying NVIDIA GPUs. They were the largest category by far of growth in revenue for NVIDIA when NVIDIA was a tiny little company. And so I think you can't deny the fact that the growth of crypto as an asset class and the fact that we could create new capital markets and this new mechanism for capital formation that had not existed in decades, right, opened up this frontier of innovation, and it opened up a frontier of capital availability for radical ideas, right? People love to talk about sort of contrarian investing. People love to talk about, you know, like being a heretic, investing in unpopular things. But that really was the early crypto pioneers, the early people in this industry being willing to do radical things, being willing to explore this boundary that sort of was very risky. So I think that crypto is a forge for capital formation, and I think we see this now. Traditional capital markets are starting to look at crypto like as a vehicle for capital formation in a more open way. And I think we've always shared this view, and my view remains unchanged. All markets will be on-chain in the future. It might take another decade, it might take 2 decades, 3 decades, whatever. I'm on the Chinese peptides, so I've got time. But I just think that like there's just this inevitability to what's happening here, and I just continue to believe that crypto is an unstoppable force and is going to eat all capital markets. So the cryptification continues.
And so on the ICO, historically, the way that at least I used to look at capital formation was you raise money to start a company, that type of thing. And there is real innovation and kind of the next gen on just how doing that on chain. But I would love, Meltem, I know you're very interested in energy, and this is more your area than mine, but I understand that there's some pretty new, interesting asset issuance that's happening on chain related to energy, like bringing cash flow related to GPUs on chain and things like that. And otherwise, assets that would have been attractive, but maybe not had a natural home in financing from banking or something like that. Could you just talk about some of these new asset issuances that might be
what I
happening?
think is really interesting that nobody in crypto is talking about yet, but I think we'll soon be talking about, if we look at what's happening with AI, right? Most of the story of the economy right now, the financial market as we know is being radically reshaped by capital allocation to data centers. In the US, 50% of GDP growth year to date is data center build out. The hyperscalers, Max 7, what are they spending all of their free cash flow on? This year, Meta started the year with $100 billion of free cash on their balance sheet. They spent all of that and issued $30 billion of debt. So they've spent $130 billion year to date on building out data centers. If we look at the top stocks in the US, they're all data center related stocks. If we look at S&P 500 growth, if we look at equities growth, it's majority been driven by NVIDIA, which went from being a very small company nobody had really tracked to now being the largest stock in the world by the margin of $1 trillion, right? One NVIDIA, we were joking about this on the ride over here, NVIDIA is larger than all of crypto's market cap. One single company. So I just think people are not understanding how radically capital markets are being reshaped by the physical infrastructure build out that's needed to support AI. We're going to spend probably $40 trillion on data centers, connectivity, storage, and energy generation, storage transmission assets needed to power the AI boom. That number could shift a little bit, but that is the largest physical infrastructure build out in human history by many orders of magnitude. I believe it will be financed on-chain. I believe it will be traded on-chain, and I believe it will be optimized, orchestrated, and ultimately financialized in the formation of net new commodity assets on-chain. There's only one place that can happen, it's on-chain. So that's what I've been focused on with my firm is we invest in Web 2 and Web 3 businesses. We do liquid, we do credit. We're now actually building data centers and energy generation assets as well with some capital partners. This is going to happen on-chain. The home of this will be on-chain. And if we look at asset classes, right, crypto, 4 trillion, relatively small. Gold is now a massive asset class. You know, it's very large thanks to the recent run-up in gold. But if we look at the largest asset classes in the world, they are real estate, of which a large chunk is commercial real estate. This year, for the first time, construction spending in the US, new office buildings was lower, and data centers are surpassing commercial real estate spend over office buildings, right? So we're seeing this real shift from the white-collar economy, knowledge work, right, which has been the driver of sort of the build-out of office space, to a shift to physical infrastructure that's going to be needed to power this new form of intelligence, right? So I just think we're not appreciating just how absolutely massive the opportunity is, bigger than capital markets. The future of infrastructure is on-chain. It's slowly happening. You have a lot of different projects addressing it. DePIN is one area people talk about a lot, and I think we're going to see really interesting new innovations in the DePIN space of protocols actually issuing debt to buy physical infrastructure assets. So I think we're going to start to see innovation across the capital structure, not just in the form of this pseudo-equity and tokens, but also in credit markets. And credit markets historically have been, you know, the lifeblood of the business we came from, which is very capex-intensive business, being oil and gas.
I would, you know, and for those of you that haven't seen Meltem's talk before or don't read her LP newsletters from Crucible Capital, I know in my experience with Meltem, the first time I ever heard the word staking, it was from Meltem, and the first time I heard the word NFT was from Meltem, and the first time I heard the word DePIN was from Meltem. So, and you can hear from her words today, you know, how forward-looking she is and how exciting that opportunity set is, and that's the way she rolls. And I'm a little bit old school, and I think the on-chain world has also got some transformative capability of what already exists. And just to give you an example, and you know, we've chatted about this at length, CoinShares is going through this IPO process, and a lot of this drag is to do with accounting, and it is shocking how archaic that whole system is. And yet, if you can imagine a world where the money is on chain, stable coins, and the stocks are on chains with coins, and it's all done there, and you have these pretty cool little apps like cointracking.info, where you can press a button and you can spit out your tax return instantly. So you're talking about a world where you go from getting your financials out 6 months after the quarter end or 3 months after the quarter end, and it's a real grind to do it, to instantaneous.
Yeah.
And so, we've got this bleeding edge where things are very new, but you can bring up a lot of the rear guard a long, long way. And I don't think actually people appreciate that for what it can do.
Yeah. I was speaking to, over the course of the last couple of days, a high-level executive at a bank, and she was describing, being early. This is kind of an early foray into crypto, but that there was an entirely parallel financial system that exists here, and it's very, very comprehensive. And so, yeah, I think that you're starting to see. It's almost like the popular narrative around crypto lags if you're in the space about 4 years or something, and it's so cool to see people getting interested about a lot of this, internet capital market is the new rebranding of kind of ICOs and a lot of the stuff that people were excited about a couple of years ago. But I'm just so excited to see, and I'm derailing us. I'm going into the weeds at the very end of this talk, which I should be going out, but I'm really curious. Can you talk about how protocols might issue debt? And I'm super interested in this because I don't know if there are listeners of Bell Curve. I host a podcast here, but the reason I created that podcast is I was super interested in this idea of protocols issuing debt, and I'm just fascinated about.
Well, it actually happened already. Does anyone recall Steam protocol from the ICO days? They had a mechanism to issue protocol debt. So basically what you have is say your protocol has a market cap of $1 billion, right? You'd have some sort of buffer where actually the protocol could issue some percentage of its value as debt. And then what's really cool, I think, about pairing physical infrastructure, right? Typically CapEx projects, and this is what I did when I worked at Exxon, is we financed really large, 20-year projects, many billions of dollars that would at some point produce cash flow in the form of oil or natural gas, right? So you have this duration mismatch where you need to invest in all of this really expensive infrastructure build out in the physical world, and you get cash flow 20, 30 years later. So what you do is you have debt, right? And you have this idea, it's called capital asset pricing model, or CAPM, where you can issue some combination of debt and equity to finance sort of this really big build out in an optimal structure, right? It's a lot of financial engineering. What are blockchains really great for? Sophisticated financial engineering. And what you can actually start to do now when you start to have an asset that you've debt financed that's now creating revenue, right, is you can actually start to pay down your debt in real time and monitor the position of your debt in real time. And you can actually take that asset that's a cash flowing asset, rehypothecate it, collateralize it, borrow against it, and kind of build this really interesting financial engineering portfolio where you can finance these long duration projects that require some asset in the physical world that will produce cash flow at some point to be securitized, financialized, traded, and you can actually inject it into this DeFi ecosystem we've created. So I just think we're at the very beginning point of starting to experiment with the opportunity to take this asset class that historically has been really illiquid, dominated by sort of specialist funds. There's going to be a lot of bumps. There's going to be mistakes. This is obviously a risky asset class. You need to sort of be a specialist and think through some of the implications of recourse and bad debt in the system, but I do think we now have protocols that are well capitalized and run by founders who have experience in project finance. So it's exciting to see that we're moving away from vaporware, purely speculative driven hype tokens to tokens that may actually help capitalize really foundational infrastructure build out and then securitize those cash flows.
Also really good for debt financing, much cheaper than equity financing, especially if you're using your equity financing.
Depends on what the asset is.
Yeah.
On the sometimes equity financing can be really cheap. It can be really expensive. But again, I think in crypto, we've used this one lever, and it's just tokens and equity. There's this lever called debt, and nobody's really thinking about it. So I think bringing this conversation around debt as part of the capital structure into crypto is going to be transformative, right? Because then you can start to financially engineer.
I agree. I know we're a little bit low on time here. Danny, can you end? There was a big last couple months for CoinShares. You've made the move over into the U.S. market, so big congratulations on that. Yeah. Can you just say a couple words on the move, to the U.S. and any kind of closing thoughts on this combination of the U.S. capital markets and crypto merging?
Yeah. Look, from the big picture, we made a call many years ago to try and be a public company. And the main driver for that at the time was not actually to raise capital, it was to get legitimacy. We were providing investment management products to vast numbers of retail investors. And it really, you needed to be squeaky clean. And in order to be a listed company, you need to be squeaky clean. So we went down that road. And I actually think that we educated ourselves around a lot of the policies and procedures and prudent accounting and decent leverage levels and so on. And I think it protected us through the FTX crisis and through the Terra Luna crisis and through various other things because we were just a more robust organization. We weren't expecting that kind of volatility, but I think it stood us in good stead. The issue we had is that when we did want to look at valuation, or as I would call it, the transmission of shareholder value, the money we were making was not being translated into a good stock price because the market segment that we were on, which is NASDAQ Europe, is not a good market. It's not a liquid market, and it's a market which doesn't give you the right multiples of your earnings. So we were languishing at about anything from 0 to 2 times our earnings. And there wasn't much to compare it with because there wasn't much in the US at the time that was listed. But a company such as ours would expect to get a 25 multiple in the US market. And for us making ballpark 100 million a year, that's $2 billion of market cap if you can make that 18 multiple jump. So it sounds like a great thing to do, and it is a great thing to do, but it's very difficult. And there's a lot of gating items around that. And it's a big lift. I mean, the IPOs we did in Europe, this is orders of magnitude more difficult. But now that the window's open, post the Trump, with the Trump administration, this is now a very fruitful hunting ground for us. And it's actually going to fuel, I think, a lot of consolidation in the industry because the people that are good enough to get out in America are going to get this big valuation. They're going to have valuable stock as currency, and I think there's going to be a lot of roll-ups going on for smaller and mid-sized companies in all sectors of crypto by the people that then have access to those capital markets.
Completely agree. And we've got through the SPAC part of this, and Jean-Marie's hopefully still breathing over there. Guys, this is all the time we have. Unfortunately, could keep talking to you both for hours, but thank you both so much for doing this.
Yeah.
Guys, give them a big round of applause.
Thank you.